What's going on, my beautiful people? Just wanted to film a quick lesson for you guys, get in some of the basics for all you new members, and just hit just hit home some of the things that have made me successful as a trader and share them with you. And hopefully through this quick little video, if you're a complete beginner, you're able to get a good grasp on understanding the way stocks move. That's probably the most important thing when it comes to trading, is just understanding what's going on, not being clueless. For all you new members, please just take a look at our terms and conditions here at the top. By joining our tribe, you agree to these terms. If you ever need to cancel your $11 a month monthly subscription, please email or DM us with your Discord name included, and we'll take you off respectfully. Please do not dispute a charge. Nobody's here to steal $11 from you. We made our tribe only $11 so that we could support our group and also teach you how to make money, not necessarily profit off you guys. So that $11 a month subscription really helps our group. It really helps us pay some of our teachers and some other people who do administrative work for us. So we really appreciate your support. And for new members, just running through the Discord real quick, there's a lot of things going on in the Discord. For those of you that are new, this might be overwhelming. You can always minimize tabs to keep tabs closed or open, and this will allow you to kind of clear up the Discord and maybe just show what you want to see. Secondly, you can mute a channel at any time, or you can mute a whole category, just so you know and you're not blown up with alerts all the time. Here you can introduce yourself. We'd love to hear little things about you, what you do, whatever you feel comfortable sharing. Also, feel free to leave your Twitter, Instagram, plug yourself, whatever. If you have a small business, plug yourself in the self-promotion channel. We all just want to help each other thrive. So getting into charting and what we're actually here for today. Today's just going to be a basic lesson on charting. There's not going to be anything crazy. It's just the basics, right? So if you're looking at this chart, you see that there's quite a bit going on. You see these are called candlesticks. The green means it's going up. The red means it's going down. That's basic. You see all of these other lines underneath. Don't get overwhelmed. These are what we call moving average. What's a moving average? A moving average is just the average price that the stock is being bought or sold for over the course of a matter of days, weeks, or hours, okay? So here we are on the daily chart, and I'm using the 20 MA. That's this purple line. So the 20 MA corresponds to whatever chart I'm on, and this is referring to the 20-day moving average. So what does that mean? Well, that means that we're looking at Apple stock. The 20-day moving average is the average price that Apple stock is being bought and sold for over that 20-day period. It follows the stock price over 20 days. It's an average line that's being created. Imagine every 20 days, a little dot is taken for the average price and a line is being drawn, okay? The 20-day moving average is a smaller moving average. Why is it smaller? Well, because it's only a unit of 20. What is a 200 MA? Well, a 200 MA is a 200-day moving average if we're looking at the daily chart. What does this mean? Well, every 200 days, a dot is pointed and a line is drawn. We're on the daily chart, so each of these candlesticks is going to represent one day. This represents the daily action for that day. So today, on this day, it's a big red candlestick. That means Apple found a top, and for that whole day, majority of it's sold off, right? It was a down day. Maybe it lost, 5% sell-off, or, even close to a 10% sell-off from the top there, referring to these red candlesticks. Anytime it's green, each of these are green days. These are the price action that was created with these candlesticks. We'll get into more about how to interpret candlesticks in a future video. That is a little bit more of an advanced practice. So now that you understand moving averages, it's the average price that a stock is being bought and sold for over the course of that unit. If we're looking at Apple stock and we're using these moving averages, how does moving average help us? Okay, well, see if you can. I'm going to give you a second. Look at this chart. I'm going to give you a hint. It has something to do with the 200 MA. And see if you can figure out what I'm looking for. And if you didn't figure out, that's okay. I'm just going to get right to it. If we're looking at this chart, when is a good time to buy? What is looking like a good time to buy to you? Well, if I'm looking at this chart, obviously right here is a good time to buy. Okay, right here is another good time to buy. Going forward, right here is another good time to buy. And then going forward, these little dips have also been good times to buy. So what's significant about this? Well, what does it mean when a candlestick is below here and my moving average is up here? Well, that means that the price action has fallen below the moving average. So the current stock price, if we're looking at the bottom of this candlestick, when Apple was at $52, I believe this was like the bottom of the pandemic crash, the quote unquote pandemic. I hate that word. If we're looking here, $52, and we go to the 200 MA, we're at $62. What does that mean? Well, that means at this current time, Apple stock is $10 below the 200-day moving average. When the stock, that's almost 15, 20% on a big stock, right? This is a big market cap. $2 trillion market cap. Apple is the biggest stock on the market. One of the biggest, if not the biggest, 2.8 trillion. So it takes a lot of money to move this, right? Quick little lesson. How do you figure that out? Well, a 2.1 trillion market cap. How does Apple stock go up 10%? Well, a whole nother 200 billion has to go into Apple, right? 10% of 2 trillion is 200 billion has to go into Apple stock to send it up 10%. So if it goes down 10%, that means, 200 or more, 400 billion sold off. That's a lot of money. That's the entire market cap of Tesla almost. Tesla's around 600 billion. So this big red candle, that's a lot of money being sold off. What is the significance to this? Well, that means that if I'm buying Apple stock right here at $52, I'm getting it at 15 to 20% cheaper than the 200-day moving average. This is the average price that the stock is being bought and sold for over the course of 200 days, right? So that's significant because that's almost, that's more than half a year. So you're getting an entry that's an entry that might only come every half year. This is setting you up for long-term investment, a 5-year investment, a 10-year investment. I mean, look at these shares at $53. Apple is a steady 130. You're up 200% and then some. So that's why we use these moving averages. That's why we love these moving averages. You use the big term moving averages to get yourself a entry long term. Why? Because that 200 unit, that bigger moving average takes longer to cycle, right? Versus the 20-day moving average, which is a smaller unit. And so it follows tighter with the stock price. Why? Well, because, there's a dot every 20 versus every 200, right? So this is a more general trend line. The significance of using these moving averages is also it tends to use these moving averages as support, right? So here we have that dip below. That's when we'd like to buy. Anytime we see dips like this to the 50 MA or below the 50 MA or bounces off the 100 MA, right here, this blue line, these are bullish indicators. Anytime a stock uses a moving average as a trend line, as a support, as something to bounce off of, that's bullish. That's what we like to see. When we're looking over here at what's going on with Apple, we can see, there was a previous high of 138, a huge little crash sell-off, bounces off these MAs, uses it as support. breaks a new all-time high, gets a big sell-off. That's what we can expect, right? Because RSI is overbought. We're above the 70s on RSI 14. It gets sold off. We get a nice bounce off RSI 30. That's when we like to enter, and it's doing its thing. What do we see here? Well, we have a low, we have a high, and then we have a higher low forming. This positive W shape is creating a reversal pattern and a potential breakout. Right now, Apple's looking like the first test, is this resistance here. This previous top of 137 needs to get broken. Then you're going to get a straight test pretty much to 145. And if we break out, you could get all-time highs on Apple. As a swing trader, how can we use these moving averages? Well, I'm using these as entry points. I buy here. I could sell anytime. Maybe I'm going to diamond hand it all the way up here. Sell it, let it crash, and then again, I'm looking to see, is it going to bounce off these moving averages? Okay, it's starting to bounce. I'm going to buy some, right? It's going up, it's going up. I might sell here because RSI got hot. If I'm looking at a smaller time frame, like maybe the 4-hour chart, oops. Well, that's the fucked up chart. We'll just use the daily chart. But maybe if I was looking at a smaller time frame, it was getting oversold. But like we said, Apple stock is a great stock to own. It's a great stock to swing trade because even if you fuck up, right? Because we're supposed to buy below the moving averages. What happens if you buy above the moving average, right? Like let's hope to God you don't buy here. But let's say you bought like somewhere here. Okay, you bought when it's way above the moving average, right? RSI is already getting super hot. Well, Apple's a great stock. You bought in at 124. Look, you held for 10 months. That's about 10 months, and now you're in the green, right? So even if you fuck up real bad on Apple, long term, it's a great stock. It's going to go up over time. They're coming out with their cars. They're coming out with augmented reality. There's so many different things. Apple Pay, Apple Finance, you're going to be able to go to Apple to get a loan for a house, right? Because they have more money than banks nowadays. So it's a great stock to swing trade. It's a great stock to use these moving averages to bounce off. And I want to keep this video short so that it gets straight to the point, not too much so you guys, get confused. But I just want to show you the power of these moving averages. Here we're going to go to Tesla. Again, same thing, using these moving averages as supports. These moving averages are good entries. How do we know which moving average it's going to fall to? Well, let's say it crashes through here. We buy here. It goes up. We don't sell. We don't take profit, right? You should have taken profit there. That's about 10%. It starts to tank, and now it goes below our entry. Or, you could think about cutting, right? Because that's break even. If you do want to hold, what you end up using is the bottom of this candlestick as your stop loss, right? So what ended up happening here is it did create a higher low, right? A low, a high, a higher low, a higher high, but we couldn't break out above 800. So that's a significant rejection to get to 900 again. So because you got rejected at 800, then it tried to create a higher high. It couldn't. It actually created a higher low or a lower high, breaking through support here. But what do we see? It's trading with this 200 MA. This is giving you an entry on Tesla over the course of 200 days on the daily chart. To me, it's looking like Tesla, it's not a bad entry here at 600. It's a very expensive stock. Kind of what's going on here is happening the same. It's almost looking like the same here right before this big parabolic move. So who knows? There's a lot of FUD going on in the markets. A lot of people talking about a big correction coming. So just know that if you enter stocks, you can have a peace of mind by keeping a stop loss, right? So if I zoom in on the hour chart, what am I seeing here? If I enter here, around here, this is my last support around, 590s. I got support in the 560s. So anytime you're entering a stock, you always have stop losses at the last support or where you feel comfortable. Maybe you let it slide a little more to this one or this one. But anytime a stock loses support level, it ends up crashing hard. I mean, look what happened here after 900. You lost 900, you crashed, created a lower high, got rejected, crashed all the way down. Look at this. 900, okay? And then we created a triple top. That's a bearish rejection, right? Because if we go into um, trading resources, and then we go to basic trading resources, we go to this little image that I had here. Okay, red equals bearish, triple top, right? What does that mean? Or a bearish pennant. What does that mean? Well, that's kind of what happened here. Triple top means you get rejected 3 times. 900 all-time high, fell through lower lows. Here's your test. If you're going to stay bullish, you'd break 900, but you don't. Rejection. Sell off. Here's your second chance. Rejected 3 times. 1, 2, 3. Descending, lower high, lower high, lower high. That bearish pendant or that triple top rejection, followed by a huge sell-off all the way to 530. So that's just some charting principles, for you guys, just so you can start looking at things. Again, I wanted to keep it short. We'll just look at one more stock. Let's look at Ford, okay? Let's see how Ford moves with the moving averages. And again, we can see you buy below these moving averages, you sell above. Anytime it dips below, you want to buy, and you get, and now look, same thing here, almost the same shape. You got oversold or overbought. You're way too far above those moving averages, right? The 200 MA is down at $9. You're all the way up at, $13. That's significant for a big stock like Ford that doesn't move very fast. Big sell-off. RSI was so overextended here. Same thing at this $16 top, almost like a triple top with the RSI. Big sell-off rejection. You're looking for, to test this support around here, around $12. You're looking for it to come back towards these MAs, dip below. Your entry would be about here. Same thing. We buy below these moving averages. We sell above them when RSI gets hot. And then we buy below them when RSI begins to bottom out. These are just simple strategies that will allow us to be successful, prevent us from wondering what's going on. Why does it sell off at 16? Well, RSI got hot and you got way above those moving averages. It's as simple as that. I hate to be so basic, but it truly, that's just the case. Look at here on the 4-hour chart how it's using this 200 MA as support. So look for it to come back down here in that $12 range, just like I was saying. This allows you to be successful. But that's all I got for you guys. Thank you so much for tuning in. I hope you learned something. Thank you so much again for supporting the tribe, and I'm looking forward to working with you guys more. Much love. Peace.